Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, September 3, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, we had what's called a woodshed day. The SPY was down $11.60. The ES was down 116 points. The S&P Cash Index, also known as the SPX, was down 119 points and change. It was a woodshed type of day, basically a 2% down day situation across the S&P complex. There's more, meaning more downside that we had in other markets. We'll get to those later, namely the IWM and the QQQ people. We had a number that was very important, 552.55. That was what I called last week an Irene type of place. Lo and behold, you wake up after Labor Day weekend and they're right here closing the day, Tuesday after Labor Day weekend, below that place. 552.55. I think traders need to be on alert with a close below 552.55. Write that down, put it on a sticky. You should already have it on a sticky from last week. Check your sticky notes. Let's take an assessment of what is underneath 552.55 or Irene, as I like to say. Let's see what else we have. So we have a breakup candle low that is the entrance to no man's land. The other side of no man's land is a gap all the way down at 543.75. That's a big space. In between or inside that space, you have a convergence of moving averages, the 50 and the 20 period moving average. So this low here from the candle on the 15th of August, the low at 548.88, that is a normal bull-bear battle place. The convergence of moving averages is right around 548 and change anyway. So that is an area to note leading into tomorrow. Write that down, put it on a sticky note. We had a discussion in the live room today about a failure situation. Is this a failed breakout and a failure? Well, it's not necessarily so much a failed breakout. A failed breakout would have busted through the all-time high and then reversed. That would have been a failed breakout. But this was a bullish pattern, eating time off the clock underneath the former highs, attempted to break out on close on Friday, meaning they ramped them up into the Friday close, leading into the 3-day holiday weekend, all that stuff. We talked about that before it happened. We always do. And then here we are on a Tuesday following the 3-day holiday weekend with the rug tug or the rug pull event. So what I always say and what I teach is the same energy that was building over here, that would have been released in the upward direction to make a new high, is now being released in the opposite direction and right into, or at least close enough right now, into the convergence of the 50 and 20 period moving averages. Leading into Wednesday, I would say this low here at 548.88 is the place traders want to watch for tomorrow. You can see where it coincides with that convergence. Moving averages, bull-bear battle place, entrance to no man's land. Write this one down. It's got to be an important place. When you look at the weekly chart, you can see here from a visual perspective, they made an attempt at a double top and they're pulling back. It's a long week. They can go right back up tomorrow, finish the week at new highs, and nobody's the wiser. So we're not too concerned on Tuesday with the weekly chart. Just want to get a visual of what's going on. All we really need to know right now is they made an attempt at another high, and they basically made a double top and beginning to pull back away from the double top. When you look at a few other charts, just to get a visual of what's going on, you want to get an assessment. Do you see anything different on other charts, or do you see a confirmation of everything we just talked about? You go to a 4-hour chart, it's the same thing. It's just spread out a little bit. Here's that entrance to no man's land, bull-bear battle place. Almost ran a test of it today. Didn't quite get exactly there, but in the neighborhood, as we say in the trading parlance. Same to similar deal on a 2-hour chart. You got a tail candle on a 2-hour chart in the middle of no man's land down here at that general place, entrance to no man's land. Same routine on the hourly chart. Intraday charts, daily chart, everything's confirming one another. We're at a very important place. We're at a critical place. If they stay below the Irene number, there's another leg down coming. And if certainly they get below 548.88 on a closing basis, that's going to open the door for another leg down, at least to fill this gap down here, 543.75. And there's no guarantees they're going to bounce it at the gap, because where would they be at that time? They would be hovering right back over the, yes, you got it, the same trend line that we've been watching for a long, long time. What about inside the numbers today? Well, it was pretty much a one-way ticket in the southern direction today. Very minimal bounces along the way. We caught one bounce early this morning, and that was right about it. Everything else was a pretty firm grip in the southern direction, or on the downside side of the tape. Let's see what kind of numbers we have as the day starts to get underway. We're an open book system. We're going to lay it all out on the line each and every day. 561.85 is our bull pivot. That's far and away from where closing price at the end of the day today was. However, let's start there early on, 9:15 this morning. 561.85 is our bull pivot. They went nowhere near there. They never got up to there, so we don't have to worry about anything above that. If they stay below the bull pivot, the door opens for Mrs. Market to fall first toward 560.70, which is a gateway to 558.90. So we may be in business with this stuff. 560.70 is a gateway to 558.90. And there's your gateway. High of day happens to be 560.81, 560.70 was the gateway. That was more important as you look back and as I reflect back on the day. That was way more important this morning than met the eye at the time. And as you can see here, 558.90 down to 558, and that's found right here in the notes. The bear pivot and support, that's a zone where we would expect them to bounce the tape. The bear pivot, there's the next number right below it. That's a support zone for a bounce back in the other direction. Lo and behold, they bounced a little bit. That was a green candle per se. We got a little bit of a scalp off there in the live room situation, but that was it. The rest of it was pretty much a down day. They leaked. They never really gave good bounces along the way. They basically just leaked all day long. They don't happen often, but they do happen, and we talk about this in the live room. Trend days down. They don't happen often, but they do happen. It's an awareness today. Although it wasn't all day, they did go sideways a lot of the afternoon. But all in all, when you look at the tape, it was a trend day down. Period. End of story. Pause the video, read the notes, go back to the chart, and double check the work. It's all in here each and every day. Everything a trader needs from an S&P perspective, SPY, ES futures, options on the S&P to be successful trading each and every day. It's all in here. We have support numbers, we have resistance numbers, we have commentary, we have strategy, we have everything a trader needs each and every day. What's going on over in Camp IWM? My favorite market leading indicator, down about 3% today, $6.73. That classifies as woodshed-ish. Also heading toward the convergence of the 50 and 20 period moving average, whether they get there tomorrow or bounce ahead of that. Either way, it's a stone's throw away. It's a chip shot. Write this down, put it on a sticky note if you're interested or are active trading the IWM, the Russell 2000. Using the IWM, we're looking at 212. 212 is an important number, give or take a few pennies on either side. I would write 212 on a sticky note. 212. Maybe it's 212.05 or 10. Maybe it's 211.91 or 211.92. But somewhere around 212 is a number. Remember, above all the moving averages, the trend is your friend. Daily chart above all the moving averages. Big down day. But what we do want to note is that they did close below this breakup candle low. So that would be in the negative camp. Even though it's a down day and she could snap back tomorrow, that's a shot across the bow. That's a flare up in the air. Closing below a big-time breakup candle low on the first shot is a big deal. Take a look over at the weekly chart. Above all the moving averages, trend is your friend. Was she just running a test in the vicinity of the higher area of a big-time breakdown candle high? Is that all that was happening here? That is a possibility. We have to be the umpire calling balls and strikes. We're talking about the breakdown candle here from the week of the 29th of July. What about the folks down at the transportation department? Here we are again, once again, for the 100th time, hovering right on that trend line. And as a refresher, we'll bring up the weekly chart for this. You know what this is. This is your pennant formation, triangle, call it whatever you want. At the apex, time is up. But if they break out before, it's a breakout. If they break down below before the apex, it's a breakdown. Either way, they're still hovering at the top trend line. They were there a couple of weeks ago, a few weeks ago, back here, closed above for a couple of weeks, now back. We'll see what happens. It's an interesting place. Seems to be magnetic. They keep coming back to it. Could this just be a one-day down wonder type of situation? Absolutely. We've seen that stuff all the time, many, many times. One day wonder, next scene shows tomorrow. We're starting with a little bit of a gap up. We call it a dead cat bounce. And by the end of the day, they've taken back most of the decline from today. How many times have you seen that in a bullish uptrending market? Write that down, put it on a sticky note. Ask yourself the question. Answer the question. It's an obvious answer because you could find it on the chart. What I find interesting is the transports are my second favorite market leading indicator, but as you know, a number one canary in the coal mine. The transports were down 1.15% today. SPX was down over 2%. IWM was down over 3%. NASDAQ or the Qs were down over 3%. So when you look at this and you say, and by the way, wait till we get the SMH over 7%, but the transports were down only 1%, a little over 1%, 184.5 points. Is that a canary in the coal mine situation? Watching it very closely. Big down day for the Q people into the 100 period moving average. Gave up to 20, gave up to 50, and into the 100 period moving average today, all in one fell swoop, as they say in the trading parlance. Weekly chart getting below the 20-week moving average, but it's a long week, even though it's a short week, Tuesday through Friday. Monday we were off, but still we have 3 days left to get back above the 20-week moving average, so we'll just leave that one be. We'll focus on the daily chart. The weekly chart we'll come back to towards the end of the week. Touched a little bit on this last week. You have a high. Are we going to have lower high situation, or were they building energy to make another run toward the old highs? Well, right now you have a lower high situation, looking at the market and calling the market, analyzing the market at face value, being the umpire calling balls and strikes. Higher low at present. Pretty obvious stuff. Not to be Captain Obvious. Now here's an interesting one that was pointed out to me today by Kenny W., I believe, in the live trading room. We're looking at the XLF, and we had an on-time type of situation, and this market looked different than others. Okay, fair enough. By the way, Kenny took this trade. Kenny made money on this trade today, even as a day trade. But what's interesting is they made a new high today. It's an on-time type of situation. They're extended away from home base, so we know at some point they're going to have to come back toward home base. They made a new high on a little bit of a spike in volume. Doesn't finish at a new high. Finished down on the day. Not tremendous, 0.75%. So we're not going to make a federal case out of that. But it's interesting nonetheless. Extended market away from home base. On time type of situation. These are the things that we talk through. We put together a lot of different items that all line up and point to the same thing. We talk about them in the live room each and every day. They're taught in the course, Lazy E-Mini Trader. We talk about some of them in here. It's kind of like the rules of the road. So all in all, if there's nothing wrong with the financials, and we're not saying down 34 cents or 0.75% means anything's wrong with the financials. There's not right now. But if it morphs into something else, that will populate, it will spread through the rest of the market. If there's a problem in the financials, there's a problem everywhere. Now look at Smashmouth. Talk about a higher low or a lower high situation. You have a high, it was rejected right at the last line of defense in terms of moving averages line of defense, which in this case was the 50-period moving average. And look where they are now. If you look at this market and compare it to other markets, just look at the daily chart. Compared to the financials, it's a joke, not even close. Compared to the IWM looks better, but not stellar, just better than the SMH. The Qs look better than the SMH. The SMH happens to look the worst of the bunch, and the SMH is a pretty good proxy for the tech space as a whole. So we're watching very closely for that rollover type of situation. We were always going to get more volatile leading into the election. It wasn't going to be a one-time wonder. Talked about it in the live room a number of times. Between now, and I said this a week ago, 2 weeks ago, whenever. I said it multiple times. The market will be more volatile leading into the election. That was a lock. It ain't over till it's over. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.